Hi folks, this is Lee Gettess with the Market Sense for the week of February 26th, 2013. The charts I use all come from the Trade Navigator software by Gettess. Great piece of software. First chart is a weekly bond market, and you can see after about a month of little tiny sideways bars here, they've broken out to the upside. It looks like a pretty significant break, but it's a little tricky because of two things. One, they've already hit into the mid-Keltner channel here, which is not that far from the previous swing high at 144.16. So it's possible that this move up has really already run its course. You can see the move has basically equaled the entire width of the sideways pattern before they broke out. So that's a pretty good move. But, these moves normally last for about 3 to 5 bars, so you would expect there might be more upside potential. Doesn't mean they'll go straight up. They could actually spend next week turning back down and finding support at this upper band and then heading up again, but I'm getting a little ahead of myself there. If they can break above the 146.16 area, the next swing high is up here around 148.24, and that's certainly easily within reach, as are higher prices. I really don't expect to see them back down into the 142 area here unless something is terribly wrong and this is a completely false breakout. I don't believe it's false. It did occur on obvious news. It was due to a big surprise from the Italian elections, and I really would much rather see them move without the reasoning being so obvious. But we've got what we got, so right now it looks like a serious breakout to the upside. Stocks, of course, have done pretty much the opposite. They traveled, I think they traveled 45 points in about 5 hours on Monday. And they look like a breakdown, but of course, the same thing here. It's a good size break. It's the biggest break we've seen certainly all year, and that could be all we get out of it. But that isn't necessarily true. Clearly, the mid-Keltner channel is down in the 1450 area, which kind of coincides with the last swing high of 2012, so that would make some sense for them to go back down there. I think it's 1450 to 1444 is the area where these two things would coincide, and I'm not going to tell you they can't get down there. However, the move up has been pretty strong, so you'd expect some people would just buy in any dip, and they may come in and start trying to drive this back up. Be interesting to see if they can close the week back above the 1500 level. That's about where this lower moving average is, and it's obviously a psychological area. And if they can close back up there, chances are we'll get a full-blown test of the high there. I suspect, regardless of how hard this break is, I suspect that we are going to see another attempt to go to the highs. Now, whether that'll go to new highs, a double top, or be a lower high, I don't know. But I don't think they'll just turn and go straight down from here. I think we'll see some sort of move back up, and we'll just have to be watching over the next week or two to see if we can recognize what they're doing. So that's what we've got for you today. I hope you can find something profitable to get yourself into. Thanks for checking in to see what we think.